In 2020, as the COVID-19 pandemic escalated, the health tech sector saw a strong increase in investment, specifically in the form of SPACs. SPACs are shell companies that have formed to gather investment with the promise to purchase an attractive company within 2 years. When the SPAC and its target company merge, this is called a de-Spac.
There's been a fairly large surge in SPACs generally, but health tech in particular, there were around 50 in 2020, another 40 or so in 2021.
The number of health tech SPACs have increased dramatically in recent years. We've seen more than a 260% increase from even pre-COVID times about 2.5 years ago.
When successful, a SPAC can offer a health tech company significant advantages, allowing it to grow in a fast-moving industry.
If you think about SPACs as a particularly convenient vehicle for earlier stage companies to access the public markets, health tech companies are companies that have a potentially very exciting product, be that a pill, be that a medical device, but their issue is they've got a fairly long ramp until they go commercial. So what you really need are very patient investors. What SPACs offer health tech companies is a way to say, look, we can get you out into the public markets earlier before you necessarily have all of the operating results that you would otherwise need to become a public company. Why? Because we've got an experienced management team that's capable of assessing the validity of your product or your pill.
While SPACs pose a significant opportunity for the fast-moving health tech sector, the road to a de-Spac can be complex and perilous.
So while SPACs are blind pools of capital, or blank checks, as they're often referred to, I think it really comes down to the managers, the sponsors of the SPACs. We think about two companies coming together. So it's about transparency, it's about communication, it's about diligence, it's about reputation.
The risk for a health tech company in a de-SPAC is that they go public before they're ready, and they become subject to the public scrutiny before they're really ready to bear it. It's fundamentally a perilous process and a long-term process, and usually it takes a very patient investor to see the healthcare company through the various stages of clinical development. For that company to become public early, for its employees to sort of track their stock prices in real time as the market basically trades on rumors and speculation, that can become quite demoralizing.
I believe that the number of SPACs committed to health tech and life sciences will continue to grow rapidly, even in a more highly regulated market, potentially.
I think it's a tremendous opportunity for the health tech companies. And in the sense, even if you're not directly doing a SPAC, the fact that there are these SPACs that are going around and that are offering quite attractive valuations, I think that is bringing the overall valuation of the sector up.